Based on the historical data and forecast, Bitcoin demonstrates an overall upward trend. The price has consistently tested and bounced off the support level of $117,200, while approaching the resistance level of $119,200. The RSI indicates that the asset is currently in a neutral range, not severely oversold or overbought. The Bollinger Bands show that the price is approaching the upper band, suggesting a potential for a pullback or consolidation. Considering these factors, I propose a strategy that combines a long position with a tight stop-loss and a modest profit target. Specifically, I recommend entering a long position at $118,700. Given the recent price action and the proximity to the resistance level, a stop-loss should be placed just below the support level at $117,100 to limit potential losses. The target price should be set at $119,600, aiming for a reasonable profit while acknowledging the potential for resistance at $119,200. This strategy balances the upward trend with risk management, capitalizing on potential gains while protecting against significant downturns. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Ethereum demonstrates a strong upward trend. The price has consistently broken through resistance levels and is projected to continue rising. The RSI values are mostly above 70, indicating overbought conditions, but the upward momentum suggests that the price can sustain this level. The Bollinger Bands have been expanding, confirming the volatility and potential for further gains. Therefore, I recommend a long position strategy. We will implement a three-pronged approach combining RSI, Bollinger Bands, and support/resistance levels. First, enter a long position at $3,700. Set a stop-loss order at $3,620, just below the support price, to protect against potential downside risks. The initial target price will be $3,860, aligning with the first forecast price. If the price reaches $3,860, we will move the stop-loss to the entry price of $3,700. The next target price will be $3,930, followed by $3,970. This strategy balances risk and reward, capitalizing on the predicted upward trend while providing safeguards against unexpected market movements. Based on the historical data and forecast, XRP shows a clear upward trend with consistently increasing prices. The RSI consistently remained above 70 for a significant portion of the period, indicating an overbought condition. However, the forecast suggests continued upward momentum, with prices projected to reach $3.94. Combining the RSI and Bollinger Bands, I recommend a strategy that capitalizes on pullbacks to the lower Bollinger Band to enter long positions. Specifically, when the price touches the lower Bollinger Band, which has been around $1.73 to $1.89, enter a long position at $1.75. Set a stop-loss slightly below the lower Bollinger Band at $1.70 to mitigate potential losses. Target a price of $3 for a conservative gain, or $3.94 to capture the full forecast potential. To refine this strategy, I propose a tiered approach. Initial entry at $1.75 with a stop-loss at $1.70, targeting $3. If the price reaches $3, move the stop-loss to the entry price of $1.75 to protect profits. For a more aggressive strategy, maintain the initial stop-loss at $1.70 and target $3.94. The RSI readings above 80 suggest a potential for a correction, but the overall trend remains bullish. Therefore, focusing on entries near the lower Bollinger Band offers a high probability opportunity to capitalize on the upward momentum of XRP. Based on the historical data and forecast, BNB shows a clear uptrend with consistently increasing prices. The RSI values have been mostly above 50, indicating bullish momentum, and have recently crossed above 70, suggesting overbought conditions. However, the forecast for the next week predicts continued price increases, reaching $817. Considering the current overbought RSI and the Bollinger Bands, a strategy combining short-term corrections with long-term growth potential is ideal. I propose a strategy where we wait for a slight pullback to the lower Bollinger Band, around $756, to enter a long position. The stop loss should be set just below the lower Bollinger Band at $752 to mitigate potential losses. The initial target price is set at $770, aligning with the first day of the forecast. To capitalize on the predicted upward trend, I recommend a second long position when the price reaches $780. The stop loss for this position should be placed slightly below the entry point at $777. The target price for this trade should be $788, aiming to capture the predicted short-term increase. Finally, if the price continues to rise, a third long position can be considered at $795 with a stop loss at $792 and a target price of $807. This tiered approach allows us to manage risk effectively while maximizing potential profits from the forecasted bullish movement of BNB. Based on the historical data and forecast, Solana exhibits a clear upward trend. The price has consistently moved higher, supported by the Bollinger Bands expanding and the RSI generally trending upwards. The forecast for the next week projects continued gains, reaching $207. Given the current RSI of 79.4, which is nearing overbought territory, a short-term pullback is possible. However, the overall trend remains bullish, and the support level at $194 provides a potential entry point. Therefore, I recommend a long position with an entry price of $186, a stop loss placed just below the support level at $194, and a target price of $201. To refine this strategy, I'll incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 20, indicating an oversold condition, we'll enter a long position. Conversely, when the RSI exceeds 80, signaling an overbought condition, we'll consider taking profits or initiating a short position. Furthermore, if the price touches the lower band of the Bollinger Bands, it suggests a potential buying opportunity, while touching the upper band indicates a potential selling opportunity. Combining these signals, I suggest a portfolio with a weighted average of 60% long position with an entry price of $186, a stop loss at $194, and a target price of $201, and 40% waiting for RSI to fall below 20 for a long position. This diversified approach balances risk and reward, capitalizing on the prevailing bullish trend while incorporating volatility signals for enhanced precision. Based on the historical data and forecast, Dogecoin demonstrates a clear upward trend with significant momentum. The RSI consistently moved above 50, reaching highs above 80, indicating strong bullish sentiment. The Bollinger Bands have also widened, suggesting increased volatility and price movement. Considering the recent price action and the forecast, I recommend a long position strategy. The entry price should be $0.259, coinciding with the first day of the forecast. The stop loss should be set just below the support price of $0.226, at $0.22, to limit potential losses. The initial target price should be $0.316, aligning with the final forecast price. To optimize returns, I suggest a dynamic adjustment to the target price based on the RSI and Bollinger Bands. If the RSI approaches 80 while the price is near $0.316, consider taking partial profits and setting a new target closer to the resistance level of $0.274. Conversely, if the price approaches the upper Bollinger Band while the RSI is below 80, maintain the long position and adjust the target price upward. This adaptive strategy, combined with the initial entry at $0.259, a stop loss at $0.22, and an initial target of $0.316, aims to capitalize on the upward trend while mitigating risk. Based on the historical data and forecast, Cardano exhibits a clear upward trend. The price has consistently moved above the Bollinger Band center line and the RSI has been trending upward, indicating increasing bullish momentum. The forecast for the next week projects continued price increases, with a potential to reach $0.979. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.858 on July 22, 2025. The stop loss will be set at $0.808, just below the support level, to protect against potential downside risk. The initial target price will be $0.913, aligning with the forecast price and a key resistance level. To further optimize the strategy, we will employ a dynamic target price approach based on the RSI and Bollinger Bands. If the RSI reaches 80, indicating overbought conditions, we will take partial profits at $0.913 and move the stop loss to break even at $0.858. This allows us to secure gains while minimizing risk. If the price continues to rise and the Bollinger Bands expand, we will adjust the target price to $0.961 and beyond, capitalizing on the upward momentum. This adaptive strategy combines trend following with risk management, aiming for high returns while safeguarding against significant losses. Based on the historical data and forecast, TRON shows a slight upward trend, although it has been fluctuating within a range. The RSI has been oscillating between 62.4 and 83.7, indicating periods of both overbought and oversold conditions. The Bollinger Bands suggest that the price is currently approaching the upper band, which could signal a potential pullback. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands. I would initiate a long position when the RSI falls below 30, aiming to capitalize on potential rebounds. The entry price would be $0.31 plus $0.01, with a stop loss set at $0.30 plus $0.01 to limit potential losses. The target price would be $0.326 plus $0.01, aligning with the recent resistance level. To refine the strategy, I will incorporate the Bollinger Bands to identify potential entry and exit points. When the price touches the upper Bollinger Band and the RSI is above 70, it suggests a possible overbought condition. In this scenario, I would consider taking profits or tightening the stop loss. Conversely, when the price touches the lower Bollinger Band and the RSI is below 30, it indicates a potential oversold condition, which would be a favorable entry point for a long position. The final portfolio will prioritize the RSI strategy, with adjustments based on the Bollinger Bands to optimize risk-reward ratio and adapt to market volatility. The final strategy is to buy TRON at $0.31 plus $0.01, set a stop loss at $0.30 plus $0.01, and target $0.326 plus $0.01. Based on the historical data and forecast, Stellar exhibits an overall upward trend, supported by consistently rising prices and breaching the resistance level of $0.503. The RSI consistently remained above 50, indicating a bullish momentum, with periods above 70 suggesting overbought conditions. The Bollinger Bands show that the price has been fluctuating within the bands, with recent movement towards the upper band, reinforcing a positive outlook. The forecast for the next week projects continued price increases, reaching $0.522. Therefore, I recommend a long position strategy. I suggest entering a long position at $0.48. Given the recent upward trend and forecast, a stop loss should be placed at $0.45 to limit potential losses if the trend reverses. The initial target price should be $0.50, aligning with the previous resistance level. If the price reaches $0.50, consider moving the stop loss to break even to protect profits. A secondary target price can be set at $0.52 based on the forecast. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SUI demonstrates an overall upward trend, consistently testing and surpassing the $4 mark. The RSI values fluctuate, but generally remain above 50, indicating bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. Specifically, I suggest entering a long position at $4.04 with a stop-loss order at $3.8. The initial target price should be $4.21, aligning with the forecast for July 22, 2025. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, it signals an oversold condition, presenting a potential buying opportunity. Conversely, an RSI above 70 suggests an overbought condition, signaling a possible pullback. If the price touches the lower Bollinger Band, it could indicate a potential buying opportunity. If the price touches the upper Bollinger Band, it could indicate a potential selling opportunity. For this strategy, if the RSI falls below 30 and the price is at $4.04, we can enter a long position with a stop loss at $3.8 and a target price of $4.21. This combined approach leverages both trend analysis and technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Bonk exhibits a clear upward trend. The RSI consistently remained above 70 for the majority of the period, indicating overbought conditions, but the price continued to climb, suggesting strong bullish momentum. The forecast for the next week projects continued price increases, further reinforcing this trend. The support price of $0.0000325 provides a solid floor, while the resistance at $0.0000388 has been tested multiple times. Considering the Bollinger Bands, the price has been consistently trading above the middle band, with the recent expansion indicating increasing volatility and potential for further upward movement. Therefore, I recommend a long position strategy. My strategy will be a combination of RSI and Bollinger Band signals. I suggest entering a long position at $0.0000346 on July 22, 2025. The stop loss should be placed just below the support level at $0.0000325, set at $0.0000320 to limit potential losses. The target price will be set at $0.0000381, aligning with the forecast high and the previous resistance level. This strategy aims to capitalize on the continued upward trend while mitigating risk through a well-defined stop loss. The RSI reading of 70.4 on July 8, 2025, and the consistent trading above the Bollinger Band's middle band further support this bullish outlook. Based on the historical data and forecast, Jito shows an overall upward trend. The RSI consistently fluctuates, but the recent values above 40 suggest continued bullish momentum. The Bollinger Bands indicate increasing volatility, with prices nearing the upper band, hinting at potential overbought conditions. Considering these factors, I propose a strategy that combines trend following and mean reversion techniques. We will initiate a long position when the RSI dips below 40, anticipating a bounce back towards the mean. Specifically, let's enter a long position at $2.07, coinciding with the first forecast price and the recent support level. Our stop loss will be placed slightly below the lower Bollinger Band at $2.04 to protect against a potential downside reversal. The initial target price will be set at $2.24, aligning with the forecast price and the upper Bollinger Band. If the price reaches $2.24, we will move the stop loss to the entry price of $2.07 to secure profits and manage risk. This strategy aims to capitalize on the upward trend while incorporating risk management techniques to mitigate potential losses. Based on the historical data and forecast, Quant exhibits a strong upward trend. The price has consistently made higher highs and higher lows, breaking through the resistance level of $127. The RSI has been fluctuating, but recently moved above 60, indicating increasing momentum. The Bollinger Bands have been widening, suggesting increased volatility and a potential continuation of the upward trend. Considering these factors, I recommend a long position with an entry price of $120. A stop loss should be placed at $115 to protect against a potential pullback to the support level. The initial target price should be $135, aligning with the forecast for July 28, 2025. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we could consider adding to our position at $110 with a stop loss at $105 and a target price of $125. Conversely, if the price touches the upper Bollinger Band, indicating an overbought condition, we could consider taking partial profits at $125. The most efficient portfolio would involve an initial long position at $120, with a stop loss at $115 and a target price of $135, supplemented by opportunistic additions and profit-taking based on RSI and Bollinger Band signals. Based on the historical data and forecast, Bittensor exhibits an overall upward trend, consistently testing and breaching resistance levels. The RSI consistently stays above 40, indicating a bullish momentum. The forecast for the next week projects continued price increases, reaching $467. Considering these factors, I propose a long-term investment strategy with a focus on capitalizing on the prevailing bullish trend. The strategy will incorporate RSI and Bollinger Bands indicators to fine-tune entry and exit points. Specifically, I recommend entering a long position at $435. The initial stop loss should be set at $419, just above the established support level, to mitigate potential losses if the trend reverses. The first target price is $453, aligning with the forecast and the upper Bollinger Band. If the price reaches $453, consider moving the stop loss to $444 to secure profits and protect against a potential pullback. The final target price is $467, corresponding to the forecast high for the week, offering a substantial return on investment. This strategy combines trend analysis, technical indicators, and price forecasting to maximize potential gains while managing risk effectively. Based on the historical data and forecast, FLOKI shows a clear upward trend. The price has consistently been moving towards the resistance level of $0.000175, and the forecast for the next week indicates continued growth, reaching $0.000161. The RSI has been oscillating between 60 and 80, indicating periods of both buying and selling pressure, but generally leaning towards the overbought territory. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for price movement. Given this analysis, I recommend a long position strategy. We will enter a long position at $0.000138, coinciding with the start of the forecast period. A stop-loss order will be placed at $0.000111, just below the support level, to protect against a sudden downturn. The initial target price will be $0.000157, aligning with the forecast peak for the week. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 40, indicating an oversold condition, we will consider averaging down our position. Conversely, if the price touches the upper Bollinger Band, we will consider taking partial profits and moving the stop-loss higher. The final target price will be $0.000175, the resistance level, to capitalize on the prevailing upward trend. This combined approach leverages the momentum of the upward trend while incorporating risk management techniques based on technical indicators to maximize potential returns and minimize losses. Based on the historical data and forecast, Solana exhibits a clear upward trend. The price has consistently moved higher, supported by the Bollinger Bands expanding and the RSI generally trending upwards. The forecast for the next week projects continued gains, reaching $207. Given the current RSI of 79.4, which is nearing overbought territory, a short-term pullback is possible. However, the overall trend remains bullish, and the support level at $194 provides a potential entry point. Therefore, I recommend a long position with an entry price of $186, a stop-loss placed just below the support level at $194, and a target price of $201. To refine this strategy, I'll incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 20, indicating an oversold condition, we'll enter a long position. Conversely, when the RSI exceeds 80, signaling an overbought condition, we'll consider taking profits or initiating a short position. Furthermore, if the price touches the lower band of the Bollinger Bands, it suggests a potential buying opportunity, while touching the upper band indicates a potential selling opportunity. Combining these signals, I suggest a portfolio with a weighted average of 60% long position with an entry price of $186, a stop-loss at $194, and a target price of $201, and 40% waiting for RSI to fall below 20 for a long position. This diversified approach balances risk and reward, capitalizing on the prevailing bullish trend while incorporating volatility signals for enhanced precision. Based on the historical data and forecast, Jupiter shows a clear upward trend. The RSI consistently climbed above 50, reaching 74.3 on July 21, 2025, indicating strong buying momentum. The forecast for the next week predicts continued growth, with prices ranging from $0.572 to $0.642. The price is currently near the lower end of the Bollinger Bands, suggesting a potential entry point. We will implement a combined strategy leveraging RSI and Bollinger Bands. The primary strategy will be to buy when the RSI dips below 30 and the price touches the lower Bollinger Band. Our entry price will be $0.572, coinciding with the first forecast price and the lower Bollinger Band. A stop loss will be set at $0.577, just above the established support level, to limit potential losses. The initial target price will be $0.623, aligning with the forecast price for July 25, 2025. If the price reaches this target, we will reassess the situation based on the RSI and Bollinger Bands. A secondary target price will be $0.642, based on the highest forecast price for the week. This combined strategy aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, movement shows a clear upward trend. The price has been consistently rising over the past 2 weeks, supported by increasing RSI values and the Bollinger Bands indicating a shift towards higher prices. The RSI is currently above 50, suggesting bullish momentum, and the forecast predicts further gains, reaching $0.198. Considering this, I recommend a long position with an entry price of $0.174. To manage risk, set a stop loss at $0.163, just below the recent low of the Bollinger Bands. For a target price, aiming for $0.188, aligning with the forecast high, offers a reasonable profit margin. To refine this strategy, we can incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, consider entering a long position at the support price of $0.182, with a stop loss at $0.174 and a target price of $0.193, the resistance level. Conversely, if the RSI exceeds 70, suggesting an overbought condition, consider exiting the current long position or initiating a short position. Combining these signals with the Bollinger Bands and forecast data creates a robust portfolio for maximizing returns while mitigating potential losses. Based on the historical data and forecast, Raydium demonstrates an overall upward trend, consistently approaching and testing the resistance level of $3.4. The RSI values have been fluctuating, but generally trending upwards, indicating strengthening momentum. The forecast prices for the next week project continued growth, with prices reaching $3.44. Given this bullish outlook, I recommend a long position strategy. We will enter a long position at $3.1, placing a stop-loss order at $3.08, just below the established support level. The initial target price will be $3.4, aligning with the resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it indicates a potential oversold condition, and we should consider entering a long position. Conversely, if the price reaches the upper band, it suggests an overbought condition, and we might consider taking profits or tightening the stop-loss. Given the forecast, I predict the price will reach $3.44. Therefore, we will adjust the target price to $3.44. This combined strategy provides a robust framework for capitalizing on the anticipated upward movement of Raydium while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Pudgy Penguins shows a clear uptrend with increasing momentum. The RSI consistently remained above 70 for a significant period, indicating overbought conditions, but the price continued to climb, suggesting strong bullish sentiment. The forecast data projects further price increases, reaching $0.0418. The support price is $0.0355 and the resistance is $0.043. Considering these factors, I recommend a long position strategy. Entry price should be $0.0347, set a stop loss at $0.033 to limit potential losses, and target a price of $0.04 for a substantial profit. To refine this strategy, I will incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. However, given the current trend and RSI readings, a more conservative approach is warranted. Therefore, I suggest entering a long position at $0.0356, placing a stop-loss order at $0.034, and setting a target price of $0.0418. This strategy combines the momentum from the RSI and the price action indicated by the Bollinger Bands, aiming for high returns while managing risk effectively.